So the presentation just covered by a standard disclaimer. We may be talking about some forward-looking discussion points. We'll just jump right in. Just overall, ABC is a leading manufacturer and supplier of custom and highly engineered technical plastics and lightweighting innovation to the global automotive industry. And we really are not a just shoot and ship commodity supplier. We really focus on products that require high degrees of engineering, manufacturing skill sets, as well as material science knowledge. As we look at our position in the marketplace, we have very strong market shares across multiple of our product lines. We have content on over 75% of all the light vehicles that are produced in North America, and also representation across all of the top 15 models that are sold in North America. So we're on the right vehicles, and we think we have the right products as well. We're very focused on a lightweighting platform and driving weight reduction to the OEMs across our portfolio to help them with their fuel economy and on electric vehicle range anxiety that the consumers have for their vehicles. We have very strong liquidity, a very strong balance sheet, and view this as an opportunity for us to continue to invest in the business and also deploy to opportunistic M&A activities while paying a regular dividend stream out. From an overall engineering standpoint, again, mentioned the highly engineered solutions is really our focus of a very strong technical team. And we combine that with our proprietary vertical integration capabilities in material science and material compounding with resin, as well as machine building, equipment building, and manufacturing process capabilities that we have in-house. And this has really given us a proven roadmap to continue to drive our depth and breadth across our OEM customers that has allowed us over time to continually drive our CPV growth higher and outperform the industry growth rates. Next slide, please, Kristen. So as we look at our product portfolio, one of the things we really like about the portfolio is our ability to cross-sell across the entire vehicle. We have products across 6 different product groups. Overall, we're about a $1 billion company, which makes us about the top 100 in the overall global automotive space, and supplying to 25 OEMs, and really focused on their needs in driving additional comfort and utility for their consumers that purchase the vehicles, as well as focus on fuel economy and battery range, which I'll talk a little bit later. So the 6 product groups are interior, exterior, HVAC products, air induction systems, fluid management, and flexible products. Overall, we have about 75 individual product lines, some of which are represented here on the page. From a manufacturing capability, we have a full suite of very diverse processes and capabilities that allows us to really develop and provide our OEMs with multiple solutions to their needs going forward. We're certainly not just a one-trick pony here, have the ability to really have multiple solutions for them. We're one of the largest injection molders and one of the largest blow molders in North America. We have painting capabilities, as well as do complex assemblies, as well as a whole host of process capabilities in regards to those processes. One of the things we really like, particularly with the marketplace where we're at right now, is we have a very diverse product group, but we also have a very powertrain agnostic portfolio. Our products, 90% of them can be used across the vehicle, regardless of the powertrain. And we really think that's key right now as we look at the marketplace, as we start to have a rapid acceleration of electric vehicles. We are EV ready now and already winning on some high volume EV platforms already today. We've had between 40 and 50 individual wins already with OEMs with our products. And we really think that we're going to be able to continue to drive growth and CPV increases across the portfolio, regardless of the powertrain. And I think we're really positioned much better than a vast majority of the tier 1 suppliers, in that we are very flexible in which powertrain is being used on the vehicle. And I think that's key now, particularly as we're making a transition. And we think some of the things that are driving some of the tailwinds that we see right now in the marketplace, really the first one is we see a large increase in fuel economy requirements coming across the globe, and particularly in North America, with the Biden administration coming in and likely going to be raising the CAFE requirements that will really drive North America by almost 50% fuel economy increase. And there's been 14 states that have joined with California to target the 51 miles per gallon. So a huge increase in fuel economy requirements. And as we see the marketplace out there right now, the approximately 77% of the sales in North America right now are in a segment we call light trucks, which is pickup trucks, SUVs, and CUVs. And traditionally, these vehicles have lower fuel economy than traditional passenger cars. So the OEMs are really going to be focusing on how do we lightweight the vehicle, because weight really is a major impact on fuel economy of the vehicle. So as we have a very long history of providing lightweighting solutions, we believe that this is going to be a continued strong influence, particularly as the North American population is again focused on light trucks, and people are going to continue to buy pickup trucks and large SUVs and CUVs in mass. But at the same time, we know electrification is coming. It seems to be accelerating the pace of change in electrification, but we also know that consumers right now do have some anxiety on the range that they're able to get on their electric vehicles. And similar to internal combustion engines, battery electric vehicles also weight is a major contributor to range. And we believe that going forward, lightweighting will continue to be important regardless of the powertrain, as the alternative is to implement more expensive technologies on the vehicle to extend range. And lightweighting is always a very cost-effective alternative to this area. So we really don't see ICE internal combustion engines going away overnight. They're going to be around for some time, probably the next 2 generations of vehicles over the next 15 years or so. And we're doing a great job serving that market today. But we really think that our portfolio remains attractive to electric vehicles or internal combustion, whichever way the OEMs are going for a particular vehicle platform. So just go through some of the investment highlights here. We have a very strong market share and leadership in North America that is really driven by our technological innovation, which results in superior margins versus our peer group. And we have very strong tailwinds really for several years going backwards and several years going forward, with a proven strategy that is applicable to the EV future that's coming at us very fast. And this will allow us to drive significant cash flows to continue investments in ABC, as well as take advantage of the target-rich environment in M&A in the current landscape. So I'd just like to go through a few points on each one of these investment highlights. So as we talk about market share, we certainly have key market shares across our portfolio. From our exterior portfolio, running boards and spoilers, very strong position. Our interior group represented by load floors and cargo floors here at 25%, and HVAC and washer systems at over 30% market share. So again, certainly the right products that are well respected in the marketplace. But on the right-hand side, you can also see that we do have content on all the top 15 vehicles produced in North America. These are the OEM's highest volume vehicles, and they really put their trusted OEM partners on these large platforms. You don't see people coming in on their first piece of business winning business on the F-150. That's just too important of a platform. So they really, it's a relationship and trust-based industry, and we've been able to develop that trust and relationship with many of our OEMs for over 40 years now. So secondly, just talking a little bit about our entrenched customer relationships. Again, we have a very strong relationships with our customer groups. The top 7 are represented here. And again, many for multiple decades of relationships. We do have a very high percentage of their vehicles have ABC content on them already, but we still see a very strong ability to grow our content per vehicle going forward. As we look at North America, approximately $72 worth of content on the average vehicle we supply in North America. As we look at our top 25 vehicle platforms, it's about $100 average CPV. And on some vehicles, we have upwards of $600 worth of content. And a very well-equipped vehicle with our content is in the 200 to 300 range. So we really believe that we have content per vehicle growth going forward, even though we have strong representation with multiple OEMs. And the way we get there is we look across our 6 different product groups. And traditionally what we do is we establish a relationship with our HVAC and fluids product group. Those are typically easier products to establish the relationship. And once we are able to do that, then we expand into our higher CPV type items of interior, exterior, and air induction. And we just build the relationship, and I'll give some examples in a couple slides, to continually drive our CPV going forward, which we've had a strong history of doing. So I talked a little bit at the beginning about our technological innovation and our technical skill sets, and I think our numbers really speak for themselves. We have over 600 skilled professionals in our technical staffs. We've developed over 330 patents in ABC, 150 new product, process, and material-based innovations and first-to-market solutions that we've delivered to our OEM customers. We've supplied over 139 proprietary resin formulations from our in-house compounding group that allows us to have unique material properties on our products to provide value to the OEMs. We're currently involved in about 32 research collaborations with external parties, as well as 22 advanced in-house research projects. And it's this type of capability that allowed us to pivot to medical device products during the COVID-19 automotive shutdown, where we supplied ventilator parts both in North America or in the United States and Canada, as well as face shields to the Canadian government and face masks in Europe as well. And this capability in-house also allows us to really focus on driving next generation capabilities across the product group. And we do a lot in lightweighted material substitutions for weight reduction. We're working on things like biomass and biopolymers, organic plastics, which are, can be things like wood pulp from sustainable Canadian foresting practices. We've developed our own 3D resin capabilities, as well as working with recycled carbon fiber to continue to drive weight. Some of the process innovations that are not shown here, we do things like in-mold welding, which reduces capital investment and cycle time on our equipment, variable cooling that we've developed in-house that allows upwards of a 15% capacity increase on our installed capacity base. And then a process we call 3D variable molding on our blow molds that allows us to vary the thickness of our blow molded plastics across the product for both a weight and a cost save. And we're able to take these capabilities and also drive substantial product innovation that we are always working with our OEMs on. There's a strong need in the market and a lot of pull for things like new storage capabilities and driving additional utility in the vehicle to help consumers use their vehicle better. We're looking at some of the foamed plastics that we've used on our HVAC product lines, on interior and exterior applications, and then even new ways to distribute air within the vehicle for heating and cooling. And then some of the future lightweighting and innovation we're working on is things like recycled carbon fiber for running board brackets. We're able to take substantial mass out of the steel and aluminum brackets that are currently used in the marketplace on our running boards. This is going to be a huge weight save to the OEMs. We're looking at the biopolymers and things like air induction systems. And then recently we just launched one of our new products, the cargo management system on the new Ford Bronco Sport, that really gives their target customers a much higher utility and value in the rear of the SUV with a reconfigurable packaging system and cargo system that includes even a pull-out picnic table that you can use for tailgating and activities. So one of the products that I think really demonstrates our capability that we have from our in-house vertical integration is the transition we really made for the industry to plastic and blow molded running boards. Traditionally, this was a product that was made of steel or aluminum, and we were the industry first to develop and introduce plastic running boards. It was a huge cost save to the OEMs, as well as a 30% lighter alternative to metal boards that are in the system. And just to give you a little bit of background on this is the way the OEMs test a running board is they basically put a 400-pound single point load right in the middle of the running board and see if it deflects. And our plastic is able to have the same deflection as steel or aluminum. And we're able to do that because of our material science capability, our great design capability, as well as our ability to create processes and machines that are able to build these running boards. And traditionally on a running board, they go from the front wheel to the rear wheel in the vehicle. So very long products require very large machinery. And it's just this combination of in-house know-how that we have in the organization that allowed us to really dominate this sector of the industry. And a lot of this really then turns into, what we're here for is to make money. Is one of the things that we constantly grade ourselves on. And as we compare ourselves to the traditional plastics interior company, we have substantially higher margins as we compare it to the North American supplier average. And these are companies. The average is made of companies like American Axle, Aptiv, Borg Warner, Dana, Lear, Linamar, Magna, Martinrea, Tenneco, Visteon, and others. We also have a margin premium over them. And we really are able to do this because we really do focus on the technical and high value add plastics, not the commodity plastics. We look at things where we really drive value add in our product design capabilities, in our material science capabilities, as well as our processing and manufacturing capabilities. And I think this really demonstrates the value that we generate to the marketplace on lightweighting solutions, customer solutions, and other innovations and unique products that we develop and provide to the marketplace. So as we look at where we're at right now in the industry, certainly we're all aware of the COVID shutdown that we were looking at almost a year ago this week. And we've been able to climb out of the depths of the COVID shutdown in a matter of 5 to 6 months, where the global financial crisis was really a 4 to 5 year climb out of the bottom of that market. And we really see strong capabilities going forward in this marketplace. For March, we saw a 17.8 million US SAR, which is the highest that we've seen in some period of time. So there's very strong demand out there in the marketplace for sure. And we think that as we look at companies that are doing forecasting like IHS Markit and some others, that we're looking at a strong growth for the next 7 to 8 year time period. Certainly, everybody's aware of some of the supply chain issues that we've seen in the marketplace recently with shortages of chips and shortages of resin and cardboard and steel and containers. And ABC has not been able to escape those, but we really think that these are transient in nature and that will be short term, and that the volumes will be made up as we look at the second half of this calendar year. But right now, there certainly is some impact out there that every tier one and OEM is facing right now in the marketplace. And I think just our positioning on the very high value end of the trucks that the OEMs really have as cash cows, they're trying to protect those as much as possible. So we really think that by protecting their high profitability trucks and SUVs, that the volume decrease for ABC will be less than you'll see in the traditional supplier world out there. So again, we just think that this is a short-term hiccup from the experiment that we went through last year of shutting down the global economy for 2 months. And there's just some ripple effects in the ability for materials to get back up to high volume content for now. But we really think that this is going to be transient, and as we move forward, all these supply shortages will start disappearing from the radar screen. One thing I would like to just mention on that page also is that as we look at light truck inventories, in March, we're down to as low as 38 days on some of the major vehicles. And that's down 25% from just last month. So traditionally on pickup trucks, the OEMs like to see upwards of 90 days of inventory, and getting down to 38 is almost unheard of. So there is a strong pent up demand out there, and will be for a long period of time, not just to fill this volume gap that we've been working to fill on inventory for the past 12 months, but also just the overall demand in the marketplace. People are ready to buy cars, and we see strong demand going forward. So just a little case study on our ability to grow our revenue. The example here is Hyundai Kia. As we look back into the 2016 and 17 timeframe, we had no business with Hyundai Kia. We worked with them to develop a relationship, and in fiscal year 2018, we were able to sell our first product to them on two of their vehicles, the Sonata and the Optima. The following year, we added HVAC to that mix, so two of our key product lines across three new vehicles. And then the following year, we're able to apply all of the HVAC and surge tanks to all seven of the vehicles that are represented there. And then within the fourth year, now we've expanded into our exterior trim and interior load floor, as well as interior trim activities. And really, as we look at the exterior and interior, those are our higher content per vehicle product lines. So it just shows our blueprint that we use to drive growth with our OEMs. It works on our newest customers, it works on our existing customers. And really what we focus on is establish the relationship, build the trust, increase both the breadth and the depth across the OEM, expand into their highest volume platforms, become entrenched, and then continue to re-win those businesses. And we've got a very strong history of re-winning our businesses once we've established the relationship with the customer. So this is just really how we drive our growth, we drive our CPV growth. And here we've been able to go from virtually no business to upwards of the $70-$80 worth of content on the vehicle across Hyundai Kia, and are now have product on almost 60% of the vehicles that they produce in North America, as well as being added to their global supply list for these product lines. And we're currently in conversations with them on expanding this relationship globally as well. So as we look at the electrification, we've had certainly some interesting wins here recently, some of which I can't show you just based on our instructions from the OEM about sharing their new platforms going forward. But I can tell you on our highest revenue OEM, we've had substantial wins that are not shown here. The ones I can show you are examples of the Ford F-150 electric, the Ford Mustang Mach-E. We've won content on the Rivian Amazon delivery van, some programs in China as well with NIO. We're working with Mercedes, with Volkswagen, and several other OEMs. And we have a very, very strong pipeline of conversations that we're having with the OEMs right now on not just programs for today and tomorrow, but also working very actively with them on 25 and 26 model year, where we've literally have hundreds of different products and activities that we're involved with OEMs. So we really feel that we've got the strong ability to continue our CPV growth in the electric vehicle space. We're currently outpacing the market rate introduction of battery electric vehicles in the marketplace currently, and we'll continue to do so going forward based on our great product positioning across both electric vehicle as well as internal combustion. So just a few of the levers that we have to continue to drive free cash flow in the business. I've talked a little bit about our sales growth, and we've had just tremendous success over this past 9 months of the fiscal year that we're currently in, and are really on pace to beat our previous 3 years as far as our new business wins with customers. And the last 3 years were actually very significant growth opportunities for us with customers. We really focus on driving our EBITDA margins higher through cost improvements, operational improvements in the business. So we're constantly taking out cost in our manufacturing processes to remain competitive. I'll talk in the next slide a little bit about our capital efficient business model. And then we really view that there's a great opportunity for strategic creative acquisitions going forward. So just talk a little bit about our CapEx as well as our working capital. We've really made over these last 4 years some significant investments that do not have to be replicated in the business. We've added a new greenfield manufacturing facility 3 years ago now down in Ramos, Mexico, in very close proximity to two of our key customers. We've modernized our two largest facilities in North America, in the United States, to really bring them up to state of the art in both injection and blow molding. And then we've also made other investments across the remaining 26 manufacturing facilities that we have, just to continue to drive product and innovative growth in the business. And again, those investments that we've made do not have to be replicated. So as we look at our CapEx spend in the lower left, as we look at the last 3 or 4 years, we've averaged about 7.5% of revenue on CapEx spend. But again, don't have to make those investments going forward. So from this fiscal year and through the business plan that we're looking at right now, we think we have the ability to drop our CapEx spend down 200 bips down to about 5.5% of revenue. And this will really help drive our free cash flow conversion, and also just help us free up cash from the business and turn it into leverageable assets. As we look at things like trade working capital, when I got here 3.5 years ago, our trade working capital as a percent of revenue was over 17%. And in these last few years, we've implemented significant focus throughout the organization, which is now institutionalized in the teams. And we've been able to drive that trade working capital down to 3.9% at the end of this past calendar year. And these are really areas that we think are sustainable based on the focus teams that we've got working on the different levers of trade working capital and cash flow that we've been able to free up from the business. So these are just some of the tools that we have within our business, some of the things that we've brought to ABC with the new management team that's been here over the last 4 years. So talking a little bit about free cash flow, as we look back from 2017 to 2020, there were some I'd say some tough things going on during that time period. Not only the higher CapEx that we had from an investment standpoint and some investments in launches, but we also had the 2019 was the strike at General Motors for 48 days. We had the COVID shutdowns, but even during this period, we were still able to generate $134 million worth of free cash flow. As we look at the trailing 12 months, which included the COVID shutdown, we were still cash positive for that time period. And as we look at the first half of our fiscal year, which ended in the December 31st, was the halfway point of our fiscal year, we were able to generate 86 million of free cash flow. But I would say 42 million of that was basically working capital unwind or rewind that was going on because of the COVID shutdowns in the prior quarters. So we think that this is, we're back to a normalized working capital, and you won't see that $46 million on a go-forward basis. We're not going to lose it, but you just won't be generating that much. But we really think that this demonstrates the free cash flow generation capability of the business going forward. And as we get through the different starts and stops that we're seeing right now from the COVID and chip shortages and resin issues and those types of things, that we think this is sustainable on a go-forward basis. So the final thing I'd like to talk about on the investment highlights section is just we really think that there's very strong opportunities for M&A out there for us. This management team's really focused on building a strong platform within ABC to facilitate acquisition integration capabilities. We basically have upgraded virtually the entire organization capabilities function by function, so that we have a very strong platform to be able to acquire companies going forward in a positive manner. We're very low levered, have significant liquidity, and as well as an excellent reputation with our OEM customers on takeover business, and they just trust us. And as I mentioned before, this is an industry of trust. So we really view that the platform is there for us, as well as a very robust set of opportunities for us to look at in the M&A space. There are several logical acquisition targets that have been long held by their financial sponsors that are at the end of the hold period that are looking for an exit. We are have had preliminary conversations with several of those and are looking at those. There's also with COVID and some of the other things you're seeing from chip shutdowns, there's more distress in the smaller suppliers that don't have as strong of a balance sheet as somebody like ABC. So those are also potential opportunities for us. But we really think that M&A would be a strong opportunity for us. not only leveraging material spend and the overhead structures, but also looking at either rationalization or combinations or expansions of manufacturing footprint. But then also the ability to do the things that we are able to do on, improving EBITDA margins to above industry levels, our free cash flow and working capital that we've been working on that I talked a little bit about, and apply those to the acquisition target as we integrate them into the organization. So just a little bit on a couple of financial highlights. I'll go back in history for those of you that are not too familiar with ABC. I won't talk too much about fiscal year 20. That was basically the General Motors strike impact, as well as COVID shutdown. So not a typical year by any stretch of the imagination. But I think 17, 18, and 19 fiscal years really highlights that we were able to grow our top line approximately 3% on a CAGR basis, at the same time that the North America was dropping volumes on about a 3% CAGR. So really a 600 bips outgrowth of the overall market performance. Our adjusted EBITDA was growing during this time period as well. We did have a little bit of drag on some launch costs during that time period. So we think we have the ability to do better than that going forward even. But as you look at our adjusted EBITDA margins, which takes into account proportionate revenue and EBITDA from our joint ventures that we have, we're in the mid to upper 14% adjusted EBITDA margin, and we think we have the ability to certainly get back to that post-COVID and to exceed those going forward, which is certainly the goal of this management team. And then finally, just from a leverage and liquidity standpoint, we've got relatively low debt within the organization for a $1 billion plus company. We've got strong cash positions, a very flexible agreement that since we went IPO, we worked with our banks on a credit agreement that was very positive towards us. It lowered our interest rates, it increased our flexibility, and basically put all of our debt on a revolving credit limit so that we can continue to borrow it, pay it back, and then reborrow it again, as opposed to just a normal term loan. You can see that we have significant liquidity within the business. At the end of December, which was the end of our first half, I had approximately $50 million of cash within the wholly owned company, another proportionate $14 million within our joint ventures. We have an undrawn revolver of approximately $157 million, and then a letter of credit, $3 million. So, well over $200 million of on-hand liquidity and just over $200 million of net debt. ABC is focused at paying an annual dividend of 15 cents Canadian going forward. And we really, when we put that in, we wanted to make sure that we start off at an area that we were confident that through the highs and lows of this business, we could continue to pay on the dividend standpoint, and are certainly confident at this level. So with that, I think, Noman, I'll just stop right here, and we can go into the Q&A section and just talk a little bit more about the overall business.
Thanks, Todd. I think it was an extremely informative presentation. So thank you for that. For question and answer sessions, if any of the attendees have any questions, they can sort of raise their hands, and Nishita will be sort of look out for that, and she can sort of cue them. But I'll kick it off with the first question, where you've mentioned it in your presentation itself that electrification is a trend which is sort of coming fast. GM is one of the largest customers that you have. If you could just provide us additional color on, are there any of your products that won't be used in EVs, or are you coming up with new products that would end up being used in electric vehicles?
Yeah, so I just say right off the top that I went through in the presentation that roughly 90% of our current portfolio is able to be used today on electrification going forward. And that, despite what some people are saying, EVs are not going to start tomorrow morning at 100%. So we really see that, that there's still 15 years or so of internal combustion engines out there that use the whole portfolio. but there is a small portion that over time we will transition, and as we grow, that revenue you really won't even see as it falls off based on our overall growth in the portfolio. But we certainly, currently we already have some EV specific products that we're working on. The battery cooling ducts that we've provided to OEMs already, and are currently in conversation with other OEMs on, is just one example of that for sure. But we really like the fact that not only is our portfolio EV ready today, but as EVs come in, lightweighting is just going to continue to be a very important strategy of the OEMs. You can always get range by adding battery packs, but battery packs have costs associated with them. They have weight associated with them. They have wiring harnesses. They have cooling systems. So there is a cost to that. And I can tell you at some point that the OEMs are going to have to make money on electric vehicles. So at some point in time, they're going to be looking at how do I take money out of the battery packs, and they're going to want to do that through lightweighting. And our portfolio today is sitting there able to do that. Even though we've lightweighted a lot of products, we've taken many from metal into plastics. We have the ability to continue to lightweight those products going forward. Just a couple of examples, on the 3D molding that we're doing on our blow molding is certainly opportunities to be able to do that. The things in recycled carbon fiber, the biomass will continue to drive the lightweighting opportunities for us going forward. But I think there's also a secondary market that needs to be addressed here with electric vehicles. Is now that the engine goes away, there's a big empty space in the front of the vehicle, and the OEMs call that the frunk now, and really that's just a big empty space. And I compare that to the empty space that's in the back of the SUVs and CUVs. And at the bottom of this page that's up right now, you can see the cargo management system that we did for the Ford Bronco was just a great idea, and in collaboration with our partners at Ford to create a product that drives additional innovation. We're also seeing things like this on working with some of our OEM partners on what does the future of the interior space look like. People are using their vehicles, their trucks, their SUVs, and even passenger cars as offices. And there's just no ability you can't store a laptop anyplace. That there's no tables, there's no waste bins, there's just not a lot of utility on the inside of the vehicle. So we're actually involved in a couple different products on reimagining the interior space around the passenger, but also reimagining the rear of the vehicle, the front of the vehicle, the areas of the vehicle that won't have gas tanks, that don't have engines, that don't have mufflers and exhaust systems, about how can you add capability in there that really drives utility for the consumers. So I'm really excited about our ability to work with the OEMs. The vehicles that they're putting out right now, they haven't had a lot of time to figure out how do I reconfigure them for this new electric vehicle world. But I'm convinced that as we go forward into the next generations, this is just going to open up tremendous opportunities for people like ABC that have the ability and technical skill sets to drive innovation in the vehicle.
That's great color. And just you'd also actually mentioned this, that you have a pretty strong relationship with a lot of these auto manufacturers. I'm just wondering if you could speak on the life cycle of a partnership that you would have with these auto manufacturers and how that sort of evolves.
Yeah, sure. So we're typically working with our OEM partners 2 or 3 years before a vehicle goes into production on that specific vehicles. But we're also working years in advance of that, just constant contact with the OEMs. And I've mentioned a couple of times, this is a relationship-based game in this industry. And we have dozens and dozens of engineers that are in constant contact with their counterparts at the OEMs. We're involved through program managers, through our sales team, working with the manufacturing teams at the OEMs, working with the purchasing teams, the design studios that we're involved with. So we're constantly in there working on projects and activities that we can really help drive and add value for them, so that when the specific vehicle comes down, we've already had conversations about or with them about new innovations that we're working on, so that when a request for quote comes out, this is not something where we're just bidding on something that somebody else designed. We really try to be part of the process going into it. And we've just got numerous different products that we've brought to market that are first to market in the industry because of this type of collaboration. So again, we work with them years in advance. A specific program is 2 to 3 years before start of production. And then we see about 6 years of production and then have a very high probability of winning the replacement business. So we really view this as everything that we do is long-term relationship, whether it's working with our suppliers, working with our OEMs, working with the owners, the investors. A partnership works, and that's just really at the heart of how we do business.
That's great. I think we're coming close to the end of our allotted time, but I'll just squeeze one last question. M&A, it clearly looks that it's at the forefront of your strategy. I'm just wondering the two parts of the M&A. What are some of the characteristics that you look at once you sort of go after an acquisition? And secondly, how big is the market in terms of, you see a lot of fragmented opportunities out there, or what's the landscape like?
Yeah, so particularly the plastic space is extremely fragmented market. It's just ripe for consolidation right now. And I think the fact that ABC is now public just gives us the currency and the platform to be a consolidator in the marketplace. And the things that I'm looking for, we're certainly going to stay with our core competencies, which is plastics and technical plastics. And so we're going to want to, we're not going to go after just commodity type products, but we're going to stay within plastics. I would look at the complementary products. I would look at some product overlaps to help with market share and OEM portfolio percentages. I'd look at geographic diversification is certainly part of the things that we're looking at. I don't know if I can get all of those with with every single acquisition that we're going after, but over time, those are certainly some of the things that are important to us and things that we're trying to do to continually drive this business. All these acquisitions, there has to be a synergistic and accretive reason for doing this. We're not just chasing revenue here. There's ample opportunities if all we want to do is chase revenue. That's not what we want to do. We want to stay in value add and things that generate good returns to our investors.
That's great color. I think we're close to the end of our time. I really appreciate it. Thanks, Todd, for taking out time and sharing the ABC story. I think it's very exciting stuff that's happening there. For our attendees, I would highlight that this PDF is also available on the platform. You can download it if you want to see it in detail. Once again, I really appreciate it. Thank you for your time, and good luck with your expansion strategy that you have. Thank you once again, Todd.
Great. I appreciate the opportunity to talk with this team. So thank you very much.
Thank you. Thanks. Our next presentation would start at 1:40. So those who want to stay for that presentation can continue to sort of stay. Those who want to exit can use the option on the right bottom of their screen. But we will be back again with a new presentation. Thank you.
Video off.